Hello, this is Megan Horniman, the Chief Investment Officer for Verdence Capital Advisors, coming to you today with our regular segment of Markets with Megan. It's been a busy day today from an economic data standpoint. We got some information on the labor market where initial jobless claims fell below 200,000 last week. We just want to remind people that there is some kind of distortions in that data given the Columbus Day holiday weekend. But again, this is still strong indication from the labor market. This was followed up by a much anticipated speech from Federal Reserve Chairman Jerome Powell at the Economic Club of New York. And we wanted to get some indication on what he was thinking with interest rates. We haven't really heard him speak since the events in the Middle East and what we're seeing with oil prices. And basically, he left the door open for either way. So in the speech, there was a little bit for those people that think he's going to pause indefinitely and he's done with his tightening cycle. But then he did leave that door open for those that believe he has one more rate hike in him. He did highlight some of the geopolitical events and how that is a major risk, but he's also highlighted that the labor market remains very strong, and that there may be the need for them to take restrictive policy again. So he kept the door open for there to be additional rate hikes. We still think that they're on the table, especially with the recent increase we've been seeing in commodity prices and how that'll filter into inflation. So what we saw in the market was the 10-year Treasury has been the biggest mover on the day. Equities are relatively flat, but the interest rate market is moving rapidly. We have the 10-year Treasury at a 4.96%. It's approaching 5%. It's looking like it wants to get there and break through that. And this is all on the anticipation that some of these inflation indicators are going to be trouble for the Fed to get down, and that they may have to raise rates at least one more time. And don't expect any rate cuts anytime soon. That's all we have today. If you have any questions or comments, please feel free to reach out to podcast@verdence.com. Thank you.